another day and new measures to stem the shilling's decline. The finance minister coming out and cutting by half the amount of dollars that banks are allowed to hold, also saying they're looking for an early disbursement from the IMF. Could these two measures finally help restore confidence in the shilling and see it trading below that 100 mark?
Yeah, certainly. I think if you're looking at the liquidity perspective, it's now quite possible that banks will start realigning their portfolios, with this new reality, especially with the 10% decrease in terms of what banks are required to hold as foreign exchange reserves. And then also he categorically said that they could potentially also look at increasing the cash reserve ratio. So those two measures, as well as other measures, I think it will immediately have an impact on the foreign exchange market.
Now, traders like motor dealers, manufacturers, importers of heavy machinery, technology retailers have started actually quoting some of their goods in dollars, obviously underscoring the jitters that many have in the market around the shilling going forward. But could this expose the local unit to further erosion?
I don't think so. I think what we're going to see is a substantial decline in imports, particularly from Asia. Most of the electronic goods, vehicles, we're already seeing a slight slowdown over the last 1 month. And I think that's going to persist with the current level of exchange rate. So we might see people starting to shift more to the essential goods and probably companies doing more of local production, particularly substituting imports, being the main gainers.
Now, the CBK Governor appears to have lost the confidence of the finance minister. Some might put into question whether it would be appropriate for Ndungu to step aside. What are your thoughts?
I think he's made the right choice. I think if you're looking at him, maybe initially they didn't understand the problem entirely. But I think the decision to not intervene in the market was probably the right one. A depreciated currency, actually, that's really the route to go, because it sort of rebalances back up in terms of exports and imports. So I think he's probably had his challenges, but I don't think that warrants his need to step aside. I think he's led the central bank in the right direction. So
you've got confidence that they're moving in the right direction. Let's then take a look at the equity market. Kenya Airways losing some ground yesterday, trading at 26 shillings 75 cents. That's of course ahead of its book closure today, declaring 1 shilling 50 interim or final dividend rather. Annual general meeting of shareholders today. Key vote in terms of the upcoming rights issue is on the cards. Are we likely to see the green light from shareholders regarding this rights issue?
Yes, certainly. I mean, already the government and KLM, the main shareholders with 50% shareholding, have support on the offer. So essentially that's going to pass. And already the 10-year plan is already being implemented. So it's just a matter of the capital being raised. I think the shareholders will just be getting comfort that the capital that is going to be raised is going to be utilized in the right way. And obviously, they'll also be looking forward to November 3rd, when we're expecting the first half results, ahead of the planned rights issue. At least it's been announced. So I think that combination is likely to be positive going forward. What
is your outlook for those earnings that are coming through? Some saying, of course, passengers have been growing, but on the other hand, we've had higher fuel prices, we've had higher salaries. How do you expect this all to play out in the bottom line?
I think what we are looking at now is more on the revenue side. Even if your costs are growing, so long as you have your revenues growing faster than your costs, I think really that's the main thing. And if you're looking at the first quarter operating numbers, already they showed very strong underlying growth. So for the full year, even with the depreciated currency, you can actually see that they are going to benefit significantly, because the bulk of their revenues are quoted in dollars.
Let's move on to the agricultural sector, really receiving the most attention this week with all the activity around the shilling. We've got Williamson tea, which was a top riser yesterday, up 7.5%. Zassini tea rallying as well. Reva Pingo, one of the strongest performers. What is your take on investing in the sector? We've got, of course, the more liquid stocks like Zassini and Kakuzi, and then the less liquid like Reva Pingo. Which of the stocks would you be putting your money into?
Yeah, certainly. At this time, we are very positive about the agricultural sector. And in fact, they've generally held up quite well this year, as well as in the last 1 month. They've probably been one of the best segments in terms of performance. Obviously, the main challenge is liquidity. We're looking at Zassini and Kakuzi. Those are two of our picks, both in terms of liquidity and also in terms of the business segments that they have. So basically also looking at the revenue side.
Let's drill into those business segments. Of course, Zassini tea, the biggest portion of its revenue coming from the tea, but as well as coffee. What is the outlook for tea and coffee prices going forward, and how is this likely to benefit these companies?
Well, tea prices have remained quite high. I mean, they started going up about 2 years ago, and initially fears were that the price were going to come off. And you know, typically the agricultural companies have had lots of volatility with the tea prices, but they've remained up. And production this year might be affected negatively, but we've also seen the currency depreciating, so that's net quite positive for the sector. In fact, this year we might have record earnings on tea, so it just generally trickles down positively for the sector.
Now, Reva Pingo really rallying quite significantly. Sisal prices have been quite high, but of course, the higher the Sisal prices get, the more competition Reva Pingo gets from synthetic Sisal producers. Would you be putting your money into Reva Pingo knowing the type of competition that is up against?
Reva Pingo posted very strong first half earnings, and in fact the last 1 or 2 months actually it's been the leading count. It's up over 20%. So there's that balance you've mentioned there. Obviously the exchange rate is it's in favor, but I wouldn't buy into it too much. But in absolute terms, it's actually quite cheap. So it's just a try to balance, but essentially I'll be cautious if we go substantially higher beyond this level. I would want to see the full year earnings first.